What if I told you there's a master plan to take apart one of America's most powerful institutions, and it's already happening? It doesn't need a single vote in Congress or a change to the Constitution. It all comes down to a criminal probe most people have never heard of. A probe that could give the president the power to fire the one person standing in his way. This isn't a political thriller. This is real. A storm is brewing at the heart of America's financial system. A high stakes showdown that's been years in the making. On one side, the President of the United States, demanding control. On the other, the Chairman of the Federal Reserve, the guardian of the nation's money. But for those who believe the Federal Reserve itself is unconstitutional, this isn't just a showdown, it's the beginning of the end. At the center of it all is a weaponized legal maneuver that could spark a constitutional crisis, upend the Federal Reserve as we know it, and permanently change the future of your money. We're going to break down exactly how this plan works, what it means for the Fed's independence, and most importantly, what it means for your wallet. To get what's happening, you first have to understand the battlefield. For years, a Cold War has been simmering between Donald Trump and Federal Reserve Chairman Jerome Powell. It's a fight over one basic question: who really controls the American economy? Is it the president, who wants low interest rates to juice the economy, especially in an election year? Or is it the Federal Reserve, the independent central bank whose job is to keep the economy stable for the long run, even if it means making unpopular choices? Trump has never been shy about what he wants. He has repeatedly and publicly attacked Powell for not caving to his demands for fast and deep rate cuts. This public pressure campaign has involved personal insults, threats, and constant second-guessing of the Fed's competence. Powell, who Trump himself first appointed in 2017, has spent years playing it cool, insisting that the central bank won't be bullied by politics and will only base its decisions on economic data. But now, the Cold War has turned hot. The weapon being used isn't a new policy, but a legal one. On Friday, January 9th, 2026, the Department of Justice served the Federal Reserve with grand jury subpoenas. The DOJ has launched a criminal investigation into Chairman Powell himself. On the surface, the probe is about a building, specifically the $2.5 billion renovation of the Federal Reserve's historic headquarters in Washington, D.C. The official story is that the Justice Department is investigating whether Powell lied to Congress about the project's scope and cost during his Senate testimony back in June of 2025. For months, Trump and his allies have hammered the renovations as ostentatious and excessive. The president personally seized on the costs, calling Powell incompetent and a fool who needed a palace to live in. But in a dramatic and unprecedented move, Chairman Powell is refusing to go along with this story. In a fiery video statement, he called the investigation what he believes it is: a pretext. Powell stated, "This new threat is not about my testimony last June, or about the renovation of the Federal Reserve buildings. Those are pretexts. The threat of criminal charges is a consequence of the Federal Reserve setting interest rates based on our best assessment of what will serve the public, rather than following the preferences of the president." He called the probe an unprecedented action, built to intimidate the central bank. So why go to such extreme lengths? The answer lies in four simple words: for cause removal. The Federal Reserve Act of 1913 was written specifically to protect the central bank from political pressure. And it's this very act that many argue the Fed has repeatedly violated, straying far from its original mandate. The act gives members of the Federal Reserve Board long, staggered terms and says they can only be removed from their job for cause. For over a century, that's been understood to mean a president can't just fire a Fed governor over a policy disagreement. For cause is a high bar, usually meaning things like proven neglect of duty or serious wrongdoing, not a tool for political revenge. But a criminal indictment changes everything. An indictment, no matter how flimsy or politically motivated, could be framed as the very definition of wrongdoing. It's the perfect legal cover, the for cause justification the administration has been looking for. It gives them the pretext to do what was once legally and politically unthinkable: fire the chairman of the Federal Reserve. This isn't just a theory. The administration has been floating this idea for months. This criminal probe is the final piece of that strategy. It is the master plan, now in motion, to seize control of America's money, and, for some, it's how Trump is getting started on abolishing the Fed entirely. To really get the gravity of this, we have to ask a basic question. Why does the Fed's independence even matter? Or is there a more fundamental question? Is the Federal Reserve itself even legal? The Constitution gives Congress the power to coin money, but for over a century, that power has been delegated to a quasi-private central bank. It's been said that one of the founding fathers warned that if the American people ever understood what the Fed does, there would be a revolution by morning. From the establishment's view, independence is the bedrock of the US financial system. It gives the central bank the freedom to make tough, long-term decisions without worrying about short-term political heat. Study after study has shown that countries with independent central banks have lower and more stable inflation over time. Firing a Fed chair for political reasons would shatter this century-old foundation. It would tell the entire world that America's monetary policy is no longer guided by economic data, but by the political whims of the White House. And we're already seeing the first tremors from that perspective. As news of the DOJ investigation broke, U.S. stock futures dropped. The U.S. dollar fell. Meanwhile, the price of classic safe haven assets, like gold and silver, jumped as investors scrambled for things that couldn't be controlled by a single political agenda. This reaction tells you that financial markets are built on trust, and they see this move as an attack on U.S. credibility. An actual firing would set off a historic legal battle. Powell could sue, and the case would rocket to the Supreme Court. During this long legal fight, the Fed's vice chair, currently Philip Jefferson, would step in as acting chair. The whole institution would be paralyzed by a crisis of legitimacy. A bipartisan group of lawmakers has already expressed outrage, with some Republican senators on the Banking Committee threatening to oppose any new nominee to the Fed until the legal mess is resolved. This could leave the nation's top economic body in a state of suspended animation, LAP. From the mainstream view, the consequences of ending the Fed's independence would be devastating. First is the threat of runaway inflation. If a president can force the Fed to keep rates low for a short-term boom, a flood of cheap money would send prices for everything skyrocketing. Your savings would be gutted, as the purchasing power of every dollar you've earned melts away. Second, this would ironically lead to higher borrowing costs. If investors believe the Fed can no longer be trusted to control inflation, it will demand higher interest rates on long-term loans to cover that risk. That means the cost of your mortgage, your car loan, and your credit card debt would eventually climb. Third, it threatens the US dollar's status as the world's primary reserve currency. If the Fed becomes just another political tool, that trust will evaporate. A weaker dollar means imported goods get more expensive, adding more fuel to inflation. But there is another perspective. For those who believe the Federal Reserve has violated its founding act and is the primary cause of inflation and boom-bust cycles, this crisis isn't the disease. It's the painful but necessary cure. From this viewpoint, the Fed's independence is an illusion, and its policies have consistently devalued the dollar for over a century. A president using monetary policy to juice the economy is seen not as a new danger, but as exposing the political nature that was always there. The fallout isn't a bug, it's a feature of finally confronting a system that many believe has been failing for decades. Even the path to get there is full of danger. Powell's term as chair is scheduled to end in May 2026. Trump could just choose not to reappoint him, but a nominee would have to be confirmed by a potentially hostile Senate. This criminal investigation is the shortcut. It's the break glass in case of emergency option to remove Powell now. It's a high stakes gamble, and your financial security is what's on the table. As this drama plays out in Washington, a fascinating subplot is developing in the world of digital finance. While stock markets are wobbling, another asset has been surging. In the hours after Powell's announcement, the price of Bitcoin jumped, climbing past $92,000. This wasn't random. For a growing number of investors, this political crisis is a validation of Bitcoin's entire reason for existence. Bitcoin was born from the 2008 financial crisis, created as a decentralized, apolitical alternative to a traditional system and a central bank that many felt had failed. Its supply is fixed and predictable, governed by code, not by a committee of political appointees. In a world where the independence of the most powerful central bank is under direct attack, Bitcoin is increasingly seen as a credibility hedge. It's a bet against political interference and the potential debasement of government-issued currencies. If the institution that guarantees the value of the dollar can be bullied for political gain, then an asset outside that system suddenly becomes much more attractive. This crisis is simply pouring gasoline on the fire. It's a real-time stress test of the global financial system, and Bitcoin is emerging as a potential lifeboat for those who see the old system as fundamentally broken. The irony here is that even if Trump succeeds in forcing the Fed to cut rates, the policy itself could be bullish for Bitcoin. It would likely lead to higher inflation and a weaker dollar, the exact conditions that make Bitcoin's fixed supply so appealing. In a scenario where the Fed loses its credibility, some analysts have put price targets for Bitcoin well into the six-figure range. The more political the dollar becomes, the more valuable a non-political monetary network becomes. This clash between Trump and Powell isn't just a political story, it's adding rocket fuel to the case for a decentralized alternative. The stage is set for a showdown that could redefine power in America and rewrite the rules of our financial system. A criminal probe, born from a fight over building renovations, has become the potential trigger for firing the head of the world's most powerful central bank. This isn't a distant threat anymore. It's an active plan unfolding right before our eyes. Is this a dangerous assault on the institutions that guarantee our economic stability? Or is this the beginning of a necessary revolution against a century-old, unconstitutional system that has devalued our money and created financial chaos? For the first time in modern history, that debate is no longer academic. The fallout from this battle will affect everyone. It will shape the future value of your savings, the interest rates you pay, and the stability of the currency in your pocket. This story is far from over. The question is no longer if this confrontation will have consequences, but whether those consequences will be a descent into chaos or the first step toward a new financial beginning.